Good morning. Welcome to Trading with Larry. I'm Eric. I'm joined by Clint. Unfortunately, Larry can't make it today. How are you, Clint? Good morning.
Good. You got me for one more day at least.
That's good. No, we enjoy talking to you. You're very insightful. You know how to get down into the weeds into a stock, which is good. You come from a sell side background, right?
Yeah, sell side equity research was I spent about 5 years. That's kind of the first part of my career.
Yeah, I was always kind of jealous of sell side guys because you guys really know how to pick apart that Excel model of all the financials, you
Yeah,
know. So
it's
you always have a leg up on the macro traders who look at everything, I think, from a much different lens.
yeah. It's definitely a different take doing the bottom up versus the top down. Um, well, honestly, you know what I mean. I think this is kind of where I think some of Larry's expertise comes into play. But when you can combine the best of both worlds, because we might not be drilling into the company details and doing that deep dive fundamental research, but taking kind of a top down thematic, what's going on with the economy, and applying that to some of the trade ideas that you can see unfold, how that's going to flow through to the markets. I think when you can combine that top down with that bottom up is has helped me a lot in my career. Put it that way.
I wanted to ask you. A lot of people like to cite the uh, uh, the PE ratio, right? Everybody, PE this, it's high, it's low, it's whatever. Do you think that's an important measure, or do you think maybe it's more important for certain industries versus others?
Yeah, I mean, you can a lot of thoughts and feelings on this one. Yeah, the PE ratio gets thrown out a lot. I would say very high level when you look at the broader market. I think a PE ratio is actually more useful as a sentiment indicator. If you want to know if it's a bullish or bearish prevailing mood, look at the PE ratio. For people who are thinking
So what
about,
does that mean? So if it goes up, then if it's high,
yeah, if
like
it's really high,
Right now the Nasdaq PE is like 28, right?
yeah, I mean, way above average. But yeah, I mean,
So
that tells you
so
bullish
above
moods
average
are,
means like good sentiment kind of thing.
yeah, bullish moods are prevailing. But here's the thing though, if you're an investor and you're thinking about how to allocate, to markets, to stocks versus cash, and you're like, you're looking at the PE ratio and you think maybe it's low or it can move higher still. Like, here's the thing: PE ratios. If you're only thinking about how you're allocating 3 or 6 months out, the PE ratio doesn't matter. Like, it doesn't matter if your investment horizon is 12 months and in. I mean, you can do the research. I mean, PE ratios are not significant at all in predicting forward returns. It's once you start to go out 1 year, but more specifically 5 years, 10 years. That's when the PE ratio really, really starts to matter. Again, when you're taking really the broader market view, looking at like the S&P 500, PE ratios on a company to company basis, yeah, that can matter more short term. There's a lot of I know you talk a lot about quant. I know there's a lot of quant strategies that look at, they'll rank an industry. They'll take GM, Ford, whoever in the industry, and rank them by PE ratio. Maybe once a week or once a month, and kind of do it's called cross sectional. So you're comparing different companies, and you want to be in the one with the lowest PE ratio. Like that works. That tends to put forward returns in your favor when you're doing it on a individual company basis. But then to your point too, PE ratios matter more for some industries. I covered when I was in sell side. A lot of my coverage was in industrials, and enterprise value to EBITDA was way more important. And so, not to get in the weeds, but enterprise value is more what's the total value of a company, considering it's how much stock is outstanding, its debt outstanding, net less its cash, and EBITDA is just a proxy that everyone likes to hate for cash flow. Um, but yeah, that's so different valuation rates matter more for different. companies. Some of the
You
stuff they
know,
don't
you
have
know
is
what's
more price
interesting.
to sales.
You know what's interesting. The companies that have the highest P/E ratios are usually the ones that are going to be the unicorns in 5 to 10 years.
Yeah, I mean that's you look at some of the names we've been talking about recently. Maybe some of the space names or some of the nuclear names. Those themes have been really really hot lately. And I mean, those a lot of those companies they don't have an E right now. The E is negative, so they don't have earnings or they're
They don't
operating
even
at
have
a
any.
yeah, they're operating net loss, and so then more so on those you're valuing on maybe price to sales is is where that comes in. But I mean, it's those names are good for trading. I mean, I don't know that you can sit down and apply again. Look, I'm coming from a background where I'm looking at Caterpillar or PACCAR, which PACCAR makes heavy duty trucks. Like valuing a Caterpillar or PACCAR is going to be very, very different than trying to value, some emerging, nuclear stock or some space tech startup. Like it's just two very different things you're looking at. If you're trying to do that bottom up fundamental, what's the intrinsic value of this company? What's it trading at? Is there a value there? Two very different things.
Yeah, and I think it has the steady cash flows makes it. I think makes that PE ratio trading a band for with much more predictability. Look, I'm of the mind. I look at it on an index level, and I'm looking for is extreme levels. And what I found is typically once the index hits an extreme level on the PE, upside tends to become limited. So I think
Yeah,
that's where we're at right now with the Nasdaq. Doesn't mean we can't go up another 5%, but
yeah,
I doubt we go up another 20.
yeah.
Right.
I mean,
So we'll see.
yeah. Again, I mean that it comes down to that valuation ratio. If people are willing to push it to a greater extreme, they will. Over that's over the near term. Over the long term, like anyone can do this. If you pull up a chart, you don't have this right now, but anyone out there, like just pull up a chart of the S&P 500's trailing 12 month earnings and overlay the S&P itself. There's a lot of, I mean, if you just Google this, you're going to find this. And pull up a chart, pull up a 40-year chart, and what you're going to see is that stock prices follow earnings. That's what it ultimately comes down to. The PE ratio is going to be variable. It's going to swing around the place. That's a lot of the daily squiggles that you see in the stock market. I mean, that's explained by ups and downs in the PE ratio, but over the long term, it comes down to earnings, which is why, a lot of our research, what we talk about at Opportunistic Trader, we focus a lot on kind of what's happening at the macro level because we want to understand, where earnings could be going bigger picture to help influence, our level of bearishness or bullishness that we should be on the market right now. But that's figuring out that earnings number for the market's what matters more than anything. I think you can see that when you overlay a chart of the S&P against its earnings.
Yeah, there are a couple of companies that I'm watching closely that have no earnings. So kind of difficult to gauge, and it's kind of funny to me. Like one example is AST SpaceMobile. I've been into this stock for a while. It caught my attention about a year ago when I started trying to look at companies that deal with space. This one came up. I think that will be a big industry in the future. And look, I mean, they have potential for a monopoly out there. They're providing broadband and telecommunication services in space, and they're constantly cutting deals with big companies. And I think they did something with Verizon and AT&T just this week. So nobody cared about this company too much, right? And it kind of caught steam, and now it's like everybody's talking about it, but it's not like it has earnings to value. Um, so it's an
Yeah,
exercise. in pure just gauging sentiment. You know what I mean?
Yep, I
But
think that's exactly it. Gauging sentiment. I mean, I've got it pulled up. I'm looking at it right now, and I mean, the company did $700,000 in revenue last quarter, and they have a $13.7 billion market cap. Like that's again, I mean, call me old fashioned, but I mean, I like to have a little bit more of the fundamentals behind it. Maybe they grow into that valuation, but I mean, next quarter and things start to pick up, but we're still talking. I mean, the next couple quarters they're doing, somewhere between 20 and 30 million in revenues each quarter, which is a big percent gain. But does that justify a $13.7 billion market cap? I don't know. I mean, for now it does because that's where the money's flowing. I mean, look at the chart. I'm sure you got the chart pulled up. I mean, it's breaking out to a new high, and that's you can't argue with. I can sit here and argue all day about it. The revenues don't justify the market cap, but you can't argue with what can't put yourself on the wrong side of the price action too, so to speak.
yeah, I feel like a lot of the a lot of retail really caught on to this one over the last month, and I don't know. It's like it's at 42 now, 41. I don't know.
So
I
you
want
think?
to be in it. I want to be in it. I don't want to be part of the herd. You know what I
Yeah.
mean?
Yeah, so I'm definitely I'm interested just from a pure short term trading standpoint. I'm interested in the space as well, just because I mean you've seen a lot of big moves there. You follow Rocket Lab at all? That's one that I've been eyeing in that sector. It's kind of a maybe call them a little bit of a pick and shovel play. I mean they're manufacturing rockets and such, but they've got a little bit of a little bit better of a fundamental tailwind behind them in terms of their revenues and earnings. And they're that ASTS, man, it's clearly a leader in that they've broken out to new highs in price, whereas maybe there's still an opportunity in Rocket Lab as they're trading just below this $30 level, which was the prior high recently tested last month or earlier this month, but originally it peaked out that level sometime in January.
Yeah. Certainly worth maybe creating like a everyone should put these stocks on their watch list. And I think it's a good gauge, like pre-market, you look at stocks like this, um, and it could serve as an indicator too. We look at the tape, Larry and I, we're looking at the tape constantly, looking for clues uh, for market direction, whether it's going to be a big day, down day, an explosive day, a flat day, and these kinds of things really help because this is like I said before, it's a gauge of sentiment. You see these stocks up pre-market, you kind of get the sense, okay, well, maybe the market's not going to fall apart today, or you see these stocks down, well, maybe there's some sort of virus in the market. So there's another one. What do you think about stable coins? I don't know if you're into that or not, but there was an IPO Circle, right? That's USDC, the stable coin. They have a revenue share agreement with Coinbase. Basically, the way they make their money is they accept dollars. They give people the stable coin. People can operate within the crypto ecosystem through this stable coin, uh, access DeFi and various other things. Um, and, it's become like a 35 billion market cap company. And, the entire stable coin industries is like around 200 billion. You start to think, options are extremely, extremely expensive on it. So I don't know. I sold a call spread out of the money on Circle, and the irony here is I'm actually bullish on the company, and I'm bullish on the stock on the on stable coins, and where crypto is going. But because the options are so expensive, I mean, it IPO'd what, like it came out right under 70. It's trading at 160 within, less than a month. That's kind of
Well,
so
so if
I saw.
you're if, so I was curious if you're bullish on them, why not do a put spread instead?
Well, because just because I'm bullish on them doesn't mean the stock can't crater 40%,
Yeah, yeah.
right?
Explain this really quick. So you did a call spread. So for viewers that maybe don't understand what in the world that is, you sold a call spread. So that means you sold a call at a certain strike price, right? And then you bought a call with a strike above that, and you net made a credit.
Yeah, you collect the credit, and what you're hoping for is that the stock it doesn't have to drop. It shouldn't, as long as it doesn't um, go above the strike price that you sold by the expiration date. You're okay. Now there could be turbulence along the way, right? It could go in the money, it could come back out of the money. Um, so there's turbulence, and when there's turbulence, if you know what you're doing with options, you can adjust it. You can move around the strikes. You can sell, like you said, if you're bullish on the stock, why don't you sell a put spread? I would sell a put spread if it was trading down, but it's up so much, and the option premium is very enticing. Um, and look, I mean, for me, I look at it also as a potential hedge for some of the other positions that I have on as well. So there's a lot of things you can do once you with options. You can structure them in a way. So like if you're coming, like I came into the trade, let's say I sold a 165 call and I bought a 175 call. I got around $3 in credit for that. Okay, so I'm at risk for 7, right? The difference between the strike prices is around 10.
Yep.
So I'm at risk for about 7. It's trading, and this is out for a month. If like in a couple of weeks, if it's out of the money, I'm okay. I'm not really going to touch it. But if it's in the money, I could start selling put spreads, and I'm sure the option premiums are still going to be fat. Where I could pick up, a couple of dollars on a 10 wide, probably about $15 below current prices, and reduce my max loss even further and set it up where I have a chance to profit on both the put side and the call side. So there's a lot of things that you can do to adjust your option positions.
Yeah, and I think it's great that you're going through the different legs and details of this because I don't think a lot of people realize the different strategies you can deploy using options like that. So I mean, what you're talking about, I mean, Larry does with the S&P Trader, one of his products. We're doing those types of spread trades almost every day. Um, Obviously, much shorter
I
term.
learned it all from him. I
Yeah,
learned it all from him. Just working
same.
with him. I used to be just a futures trader predominantly. That's the space I was operating in. I started working with him, and he started, he trade. He was trading these credit spreads every day on the SPX.
Hmm.
So that's where I picked it all up from.
Yeah, yeah, like exactly what you talked about. I mean, we're doing spread trades every day, credit spreads on just on the S&P. Obviously, keeping it way shorter term than probably what you're looking at with Circle, but we're doing spreads on options that expire pretty much same day, almost every instance. So,
Zero DTE.
yep, zero DTE. I just saw a chart the other day that zero DTE volumes are at a new record high or new record share of total options volumes. I mean, it's like it's over 50% now. Um, it's just they're talking about more, So it really exploded whenever they added, was it the Tuesday, and they started adding expirations for single
When was that?
stocks.
That was, I think, like May 2023.
Yeah, so 2022 or 2023, and now they're talking about, that's the rumors that they're going to add more daily expirations for the big, most liquid names. So we'll see where that
In 5 years,
where
they're gonna add like expiries every hour. You can bet
that
where the market will be at 10 a.m.
along with 24/7 trading, right?
Yeah, so no sleep
No, so
for anyone.
you have to hop on the show every day.
Oh my God, I've become such a degenerate with this trading. Like the other night, I went to sleep at like 5 in the morning. It's crazy sometimes, but you have positions on, and you know what's been what the issue has been this year specifically, and I knew this would happen with Trump in the White House, but uh, I feel like the big opportunities actually come during Asian European hours. So that's where the action is, and you want sometimes I'll get lucky. I do what I have to do by midnight. I'm done.
Yep.
But like the other night, I had to battle that thing until like 5 in the morning.
Well, I think yesterday was a great example, right? I don't know if you traded the after hours session yesterday, but I mean, you had a big, fairly decent sized rip in the market. You had a reversal in oil, right? Because the headlines coming out early in the trading day were that Iran was trying to negotiate through back channels for a ceasefire. They wanted to end things. So we got that counter trend move in stocks and oil. And then by the time evenings rolling around, I'm seeing people posting on Twitter or X or whatever about,
Why are they
Trump's.
trying to negotiate a deal? Don't they want to destroy Israel and America? Why do they want to do a deal now?
I mean, you look at how hard they've been hit and the leadership that's been taken out. I think they're starting to cry uncle a little bit. But then the headlines last night was that Trump's having his advisors gather in the Situation Room and he's telling everyone to get out of Tehran. It's just like, and now we're reversing yesterday's move a little bit. Now we're futures down this morning, oil's up.
So what happened? Let's recap what happened. The market looked like once again it doesn't care about war. It doesn't care about tariffs. It doesn't care about anything, and rightly so. I don't think these headlines ultimately matter, or in the least, people don't fully understand them. So the market shrugs it all off. All of a sudden, did it happen? Yeah, I think it happened after market close.
I think it is after close, yeah.
Yeah, after close, Trump leaves the G7 early. Where was that? That was in Canada,
I think
right?
it's
The
in
meeting.
Canada, yeah.
And so he leaves early, doesn't sign the G7 statement looking for a ceasefire, implying that he himself doesn't want a ceasefire. Leaves early. Everybody goes to Washington, and so naturally everybody's thinking. And then he comes out with a tweet: Iran should have signed the deal, and by the way, everyone should evacuate Tehran.
Yeah.
And that's what I think. That's what triggered the market to drop. Am I getting this right?
Yeah, I think you laid it out play by play. What has gotten us to this point sitting here this morning.
Yep, play by play. That's exactly what it was. So again, another headline: the market is down. What do we do today, right? So, I mean, where do you think you and Larry probably talk about the straddle every morning? Where do you think the straddle is given this horrifically scary news?
I don't you know what? I mean, the straddle the last two or three sessions has been nowhere near where I thought it would be. I mean,
Exactly, and it's
I'll
even
guess.
lower now. So it's
Is it
even
okay? I was
lower.
gonna guess, is it 27, 28?
I think you're close. You know what? Let me. It is at about 28, 29, same spot.
Yeah. So
So
no
the
no
market
one
doesn't care about this
no
either.
one cares. No one cares. It'll be interesting to see if the straddle starts to widen tomorrow because we got Arguably this week's main event's happening tomorrow, right?
What was that? I'm sorry.
I said that arguably this week's main event is happening tomorrow.
Yeah,
Uh,
we didn't even get into the Fed meeting yet, right? So,
yeah, I
so what do
mean,
you? So that's today. That's the setup for today. We have a market down on yet another headline. I don't know. VIX isn't really doing anything, So I don't know. Let's see what. But I think conditions were kind of like a little bit overbought. It just felt like the market would pull back a little bit before the Fed anyway, and maybe this was just an excuse. We
yeah,
shall see. But yeah, let's get into the Fed. You know, I'll preface it with December Fed swaps, which price in Fed rate cut or rate hike probabilities, are pricing in 50 basis point total cut in interest rates by December. So, what do you think?
yeah. I'm on the CME. If you use their tool, I think it's priced off the same thing. But yeah, they're showing odds currently favor 50 basis points. So two quarter point rate cuts between now and year end. First one looks like coming with the Fed's September meeting, and the next one at their December meeting. So, a lot of the commentators you're going to hear this week, everyone's going to say the Fed's going to stand tight. They're going to keep rates where they are, take a wait and see approach because, but here, I mean, they're in an, they're in kind of a tight spot because right now, I mean, you can argue policy is pretty restrictive. Fed funds is currently at a range of it's 4.25 to 4.5%, and you've got inflation at 2.5%. So that means Fed funds is 2% above inflation. That's almost double the long-term average. Fed funds on average historically back to the 1950s. If you look at the policy rate, it's usually about 100 basis points above inflation. Right now, we're 2% above inflation. And the last time we were that far above inflation was just before the financial crisis. It was in 2006 or seven. So, I understand, I understand the pressure that Trump is trying to apply to Powell to get him to cut rates because, yeah, I mean, inflation's come in. I don't want, I've made my feelings known on where inflation could be heading. Um, but inflation's come in for sure. It's pretty far below where current Fed funds is. So there's a lot of room for them to start cutting, but there's just too
Well,
much
where do you
uncertainty.
think inflation is? Where do you think? And I think from what we talked about yesterday, I think you think inflation is heading higher towards the end of the year.
Yeah, I think in the back half, you're going to see inflation inflect higher. Part of it's because you've already seen that in these prices paid components of different surveys, but again, that's a survey. So you got to wait for it to show up in the hard data. But you're seeing, the prices paid from, everything from manufacturing to services firms is jumping higher, and that tends to lead changes. So those things are moving up. And then we talked about commodities yesterday and how commodities are right on the verge of
That's
breaking
hard
out.
data. Commodities are hard data.
That is hard. That's what I'm saying. I mean, that would
Yeah.
just be the latest evidence. So yeah, I mean, I'm definitely of the mindset right now, based on the evidence available to me, that inflation is going to inflect higher in the back half. It doesn't mean
Yeah, I agree
all of a
with you.
sudden the next month's inflation report is going to, see a big jump higher. Sometime in the second half of the year, you're going to see inflation inflect higher, and
I,
you know,
I'll take it a step further. I think these CPI reports we had, they're probably like the last one. What did it come in? 2.4 or
2.4.
2.3?
Yeah.
I think that's probably the last soft inflation print we see for the rest of the year. Uh,
Yeah, I mean, and we'll look at where, I mean, PPI. Everyone focuses on CPI, Consumer Price Index. On the Producer Price Index, that bottomed out. I mean, I have to pull up the chart, but I mean, like a year ago, and it's been moving higher. Now it came in the most recent report, but it's still, call it an uptrend. PPI leads changes in CPI. PPI is moving higher. You know, so Look
You,
for all
you,
these leaks.
you ever see that? You ever see that indicator that it's just the CPI minus the PPI, and that calculates your margins for all these companies out there as a whole.
Well,
You
I know
know,
there's.
yeah. Go ahead.
Well, I say I know there's the. We talked the other week about the trade services number in the PPI report. That's a way of looking at margins for profit margins for wholesalers and retailers.
Yeah,
That had a big that so that's a way to track. Or that's more of a way to track, are companies eating higher costs, or are they trying to pass it on? Right now, the evidence is that they're eating it so far.
they're
Um,
eating it. Right.
which
That's why we probably don't see the inflation reports higher.
Yeah. Well, and I think they're eating it near term because there's so much uncertainty. I mean, it was, back in early April, it was reciprocal tariffs on, even territories that had nothing but seals and penguins on them. And then, those got put on hold for 90 days, and things, went the other way, in terms of the market. But I mean, if you're a company, you put yourself at risk, one for backlash from the public, but also from a demand standpoint. If you take that step to pass on price increases, but your competitor's not, that's so I think it's almost like a game of chicken right now to just see who, you're eating it for now because you don't know what's going to happen, if you're going to get these deals in place and the tariffs go away. So you're willing to eat it short term because maybe they just go away. But if they don't go away, eventually, if you want to preserve your profit margins, you have to do something.
Well, what are they going to do? They're going to pass it. I mean, all these companies already said, we covered it with Larry. There were a bunch of companies that were basically saying we don't know how much longer we're going to be able to kind of hold the fort with this. And if the market thinks tariffs are going away, I'm sure they don't. Right? It's not like we know something the market doesn't. I think they're just ignoring it because what they don't see is what we're talking about, which is the lag effect of tariffs, and there's also a lag effect of commodity prices. Commodities go up, CPI follows about 3 to 6 months down the line. Commodities drop, significantly enough, CPI will fall 3 to 6 months down the line.
Yeah.
So there's a lag effect that I think nobody has on their radar right now. So yeah, towards the end of the year, we could have inflation prints that start to surprise to the upside. So I start to question. We mentioned that 50 basis points um, in in rate cuts that are priced in the swaps market. Do we get any at all?
Yeah.
Um,
Well, I think coming into that softer CPI report this month, I think the markets were only pricing one cut, if I remember correctly. And so I think it's evolved over the last month or so that it's going from one cut back to two cuts now. But yeah, I don't know. I mean, maybe we won't get any cuts. What's going to be interesting is that the narrative is going to be inflation driven by tariffs. When if you get this breakout in commodity prices, commodities are going to be the bigger driver, in my opinion. People will be fixated on tariffs and everything going on there, but commodities could be a bigger driver instead. And it's a risk that, quite honestly, I've not heard anyone else talking about. No one's really discussing this. You're not seeing Bloomberg or CNBC or anyone else talk about where these commodity indexes are trading at and what it means for the inflation outlook. It's not being covered. All the attention's on all the noisy headlines around
on
trade
Circle,
wars and
AST SpaceMobile, on a Trump tweet. So here's the chart. I want to pull this up. This is the December swap, right? Currently priced in at 3.8. So I'm going to annotate just a couple of things on this. So this is where This is where the stock market peaked out right here. Right, this is where the market peaks out in February. Rate expectations drop, right, by almost 75 basis points. We had a big drop in the market, so everyone thought we're going to get these rate cuts. All of a sudden, we're back to a bull market, and now we're right back up. So this thing has been basically following market sentiment. Would
Yeah,
you
I mean,
agree?
which
That's how I'm reading it. Market
yeah,
goes up, the market they're gonna think, okay, no rate cuts. Market goes down, we're gonna get rate cuts. I don't know. Seems a little asinine to me, but I just quite if we
here,
get inflation at the end of the year, um, and the other thing is, how are they going to fight if they're worried about stagflation? How do you fight stagflation by lowering interest rates? That's not how you do it. You
well, I mean,
actually
I
fight
think
inflation by raising interest rates.
yeah, as I said, I think the early 1980s gives you the precedent that you need. That the focus is going to be on fighting inflation at the expense of the economy. I mean, that's what it'll come down to. I mean, they'll try to walk the line as long as they can. I mean, that's why they've kept rates where they're at, because yeah, they are concerned about what's ahead, but you haven't seen a lot of these labor market measures deteriorate significantly. We talked a little bit about some of the warning signs creeping in recently, but overall, I mean, jobless claims are still pretty low. The unemployment rate's at 4.2%. There's not really the labor market's not giving them a reason to have to budge or move rates lower yet. But Fed labor market's a lagging indicator, and the Fed has a history of being too late to act. So we'll see if the same thing happens this time around.
I hope you're not a solar investor. I'm just noticing these stocks are down 20,
I
25% pre-market.
I didn't catch all the details of the headline, but I know something with solar and EV tax credits got removed, or they're being phased out sooner under a revised version of a bill making its way through the Senate. That's
Yeah, that's
that's all I got
exactly
on that one. But
correct.
yeah,
Yeah, that's exactly correct. Here's the headline, basically. So, First Solar, it says fell 17%. Actually, it's now down 22%. So, geez, just like that, the bubble has burst in these stocks.
they're
Any
they're
insight there? You trade these at all?
I no, I not so I traded them a little bit during the run up in it was like 2019, 2020. Solar and a lot of renewable names like Generac, generators. I traded that one in the run up. Then I've not really done anything with those names of late. And I mean, you for most of those, you can pull up a chart, and they're already down so much from their peak that a 17% decline is not going to look like much if you're looking at a 5-year chart of these things. Money's leaving the solar trade and it's going in the space trade. Short solar, long space. That's the trade today.
Oh, that's interesting. You shouldn't say things like that to me, because then I'm going to start actually, okay, let me look into that. And then I'm going to start trading it. If I lose money, I'm blaming you.
So I just won't come back on the show for a while.
No, don't worry about that. You're doing just fine, my man. So you mentioned some industrials and other stocks that you were looking at. What do you what's your top like play? What's your top play right now?
Well, I mentioned natural gas
That's not a
yesterday.
good question. That's actually not a good question to ask another trader, because that's not how we really. What's your top play? It's not. Is that a good like? What's your outlook on this stuff? because this top play stuff, one day it's like you look at it, it's all about that sentiment, right? It's like you could have a top play, but you may not want to be in it right now. But whatever, go ahead.
Yeah, I mean, I'm looking. It's like my outlook. If I'm looking for a place to trade right now, I like certain corners of the commodities market. We've talked about the bullish setup in commodities. Correct me if I'm wrong. I think natural gas is getting a bid this morning, and I've been pretty bullish on a number of the producers. So I know you've talked about LNG a lot, but I like Range Resources, EQT, Intero Resources, some of the natural gas, the bigger natural gas exploration production companies. From a call it a position trading standpoint, I'm bullish on those. Position trading meaning if I have a horizon that's weeks to months looking out. Those are some of the names I'm looking at, and then
EQT, yeah, EQT looks great. I mean, you
yeah, a
want a
lot.
text trend uptrend? I mean, this is it.
Yeah, I mean a lot of these things too. If you pull the chart back far enough, you'll see a lot of these things are taking out So we had a big run up in commodities in 2022 after the Russia invasion of Ukraine, and these stocks had a big run that year. Uh, the moves that we're seeing here recently are starting to take out those peaks. So they're starting to make new highs above those 2022 levels. So that could be a significant breakout in those names, and that's probably the one area I'm watching most closely right now.
So a lot of people like to put a stock like EQT up against actual natural gas commodity prices. What would you say to somebody that does that?
You better understand if they hedge. You better understand if they hedge to the extent they hedge, what those hedges look like against current prices. But ultimately, again, a company's stock price is going to be a reflection of its earnings. Is EQT are they growing earnings? What do analyst revisions look like? That's going to be the other important factor there.
I remember, you remember back in like 2014, 2015, oil started to collapse, right? And that's when shale came. Shale had its coming out party, pretty much,
Wasn't it
right?
that the Saudis were trying to push prices low to get these shell names
The
out of
Saudis,
business?
no, the Saudis threw in the white towel. They would usually defend by cutting production, but because shale just flooded the market with oil, and it became very obvious that the United States was about to become the swing producer
Yeah,
globally. They were like, we can't defend, and it became a race to the bottom, and oil prices collapsed. So that was a time where you mentioned who's hedging and who's not. That was a time where in the oil industry, everybody figured out who was swimming naked, pretty much. There were there were a lot of companies out there that had very aggressive hedging policies, where it basically became a leveraged oil bet.
yeah, yeah. I remember. Pretty much the collapse in energy earnings back then was a big reason why S&P earnings went down that year. That 2015, early 2016 period was definitely a very volatile time for the markets overall. I mean, I know you had a couple 10% plus peak to trough drawdowns in the S&P at that time.
Fun times ahead. But a lot of these energy companies kind of became much more responsible, uh, and I don't think the market is looking at them the way they used to, and that's why you see companies like EQT, like you were mentioning, with sound hedging policies, and they I think they've kind of figured it out. A lot of them on how to be financially responsible, stable, use leverage the right way, use debt the right way,
Well,
and
and it's another way to back into some of these themes that everyone's really focusing on right now. You talk about kind of the AI trade. Well, guess what? AI demand is driving this huge data center build out, right? Well, you need to power these data centers, and to the extent that that's kind of the reason why nuclear is getting a bit of a bid right now as well. But until that those plants start to proliferate more, I mean, if you want a kind of a lower carbon source of energy, um, with what's available out there, I mean, you're looking at natural gas. I mean, there's natural gas demand is expected to see a big boost from, call it the AI data center build out. Then who else knows what happens with the LNG trade? I mean, that could be another tailwind if you get demand for U.S. natural gas in other markets.
Yeah, that's what I'm hoping for with LNG. And you know what the problem is, like with LNG, with Cheniere, and sometimes, and for I don't understand why, but sometimes it starts to correlate in the very short term with natural gas prices. And I'm just thinking, man, they don't even produce natural gas. It's LNG.
Yeah.
It's not that, you know what I mean? And still there's this correlation because the algos just want to pair it up together. But you mentioned nuclear energy. Maybe that gets even more of a bid now that solar energy doesn't have those tax credits. We'll see. Nuclear, solar. Um, to some extent, I kind of group them together with like the marijuana stocks sometimes because they're so I don't know. It's like they're so susceptible to the next regulation either going through or not going through, and it becomes like you know it becomes like a coin flip.
I mean, honestly, Eric, I think it's like a fashion fad. Like it's different fads are going to come and go. It's the same thing in the markets. I mean, you got certain themes, groups. They're whatever the story will be behind why they should be doing well. Everyone will plow in, and then you don't want to be left sitting there when everyone decides to plow out at the same time.
So what you're saying is the stock market's like one big popularity contest, and everyone
Certain
wants to be.
segments, you talk about marijuana to nuclear to solar to space to whatever it is. I mean, it's just
Who's the
if
new
you if you,
homecoming?
if you can hey if you understand that you can trade the fad, you can make a lot of money doing it. But you don't want to be left chasing the fad. Put it that way.
That's right. That's right. But investors have already long forgotten all the stocks that they're stuck in from the peaks of 2021. I
Right.
mean, right? Has ARK, the
So
ARK
take some cash.
investment, has that ETF gone back to all time highs yet, or no? I don't think so. Not even
All
close, right?
No, it all-time highs. What are you talking about? This thing trades at $65 a share right now. It peaked at one close to 160 back in 2021.
I knew it had a problem when on their website they used to. This was back in 2021. So the stock market as a whole peaked out, you know, at the end of 2021, but ARK peaked out, and a lot of these high plays from COVID peaked out in February of 2021, a
Yep.
full 10 months before the rest of the market peaked out. And I knew it had a problem when on their own website they used to put year to date returns on the website, and and they took that off and they put 5 year trailing, and I'm like, okay, there's a problem here. So that's what it is. Wow, it's 9:20.
Yeah.
Enjoyed talking to you this morning, sir. What do we think? Straddle's at about 30. Are you going to
I
get a
mean,
call from Larry in about 10 minutes?
probably.
He,
Yeah. I don't know. Maybe.
yeah,
I'm assuming we'll want to see if we can get a little bit of a rally um, at the open from where we're currently trading at. Maybe we look at a call spread, just because I know, the prevailing mood is still tilted bearish. So we'll see. And I agree with that. I mean, I think we're still we're talking the other day. We were coming back to that Friday high. I mean, I think I would look to fade those trends and look for some downside this week.
All right. All right. Let's see if that pans out. And if it doesn't, listen, trading is we have 260 chances a year to get it right. Right. So good talking to you. Good luck, everyone. Thank you all for joining us. I think Larry's back tomorrow. Good talking to you, Clint, and have a great rest of everyone's day. Take
Likewise,
care.
appreciate it. See you, everyone.